welcome Jesse Chen, director at Long State, which is an investment fund. Erez Ichalov of Traxis, and Frank Nikolic, a base and battery materials analyst at CRU Group, and Brian Savage at a manganese story in the U.S. In a company called Electric Metals. So why don't each of you, I've asked each of you in the pre-discussion here to, I guess, just talk about a little bit about your fund, but like the main thing you think the audience here, the most important thing that you'd like to convey. Jesse, why don't you start?
Hi everyone, my name is Jessie Chen. I'm a director of Longsay Investment, and our fund has been around since 2011. And since I joined the company 2016, we deploy a lot of capital into graphite, lithium, cobalt, and nickel industry. And we see the booming buzz in the last couple of years, and I'm still bullish about lithium in general in the long term.
Erez Ichalov. Until the end of 2023, I was the managing director in charge of investments at the Traxis Group, and focused more specifically on net zero enabling materials, the whole suite. We made some relevant investments, including in some of your clients, in Talon and what became Arcadium, starting from Namaska, and then Nuvamon Graphite and Lycycle and some others. I still run the investment committee at the Traxis Group, but I also became very passionate about early stage exploration as something that's going to be quite necessary to feed the system here. And more than that, and hopefully I'll talk about it later, about the narrative of tech will save the day. Over to you.
Thank you. So Frank Nikolic, I'm with CRU. We are an independent consultancy market research firm. Quite a few of the companies that you will talk to today are clients of ours, where we provide them with market research and pricing. In terms of what CRU does, we cover all the commodities relevant in this space, from all the way from ore and mining down to end use applications. I joined the company in July. Prior to that, I spent about 2 decades with Vale Base Metals.
Brian Savage. I'm the CEO of Electric Metals now for 4 months. I've done a deep dive in the manganese markets for the last 5 years, so I've got a pretty good handle on the manganese from ore all the way through to the high purity products. We've got the highest grade manganese deposit in North America, and our strategy is to be producing high purity manganese products for the North American industrial sectors.
Okay, Frank, do you cover base metals?
That's
do
right.
you have a view on manganese?
We do, but that's not in my remit. Most of my coverage is lithium, nickel, copper, cobalt. That's kind of the strengths.
Lithium, nickel, copper, cobalt. Okay.
That's right.
Which metal are you most optimistic about?
Copper, by far. Copper. I would say copper and lithium are two of my favorite metals.
Your favorite? Okay.
Correct, personally. Yeah. So when it comes to, maybe I'll elaborate a little bit. So when we're looking at the supply demand for the critical metals within this space, certainly the narrative of we need a lot of these metals over the next decade or so to support decarbonization is evident to everybody. And just like you spoke, and earlier this morning some of the gentlemen spoke, there is a need to build supply. Like for lithium, you mentioned, where's the 2 million tons are going to come from? For copper, where's the 9 million tons are going to come from? You could have scenarios where these price projections become quite wild. Certainly within the near term, our view when it comes to lithium is relatively balanced market. We don't see prices going back to where they were. Probably beyond the 5 years, we'll have to start seeing some appreciation. Nickel is a tough market to be in. Indonesia dominates the space. Growth there continues to be in the second gear or first gear. When it comes to cobalt is being thrifted out of the metal, out of the battery, because of the DRC exposure and the ethical sourcing issues. Although we may see some comeback given some of the high voltage applications of the batteries. And I'm not sure if I missed any or not. But
we have a manganese gentleman on the panel, so I'm just trying to get a view on manganese, because increasingly I guess manganese, Ares.
Absolutely. And we're bullish. Not all manganese is born equal. There's no shortage of manganese going into basically into stainless steel, either as as ferromanganese or as silicon manganese. But when the M is added to LFP to become LMFP, it basically means that manganese is almost agnostic in where other materials have a bit of a dilemma between NMC and LFP. We've always had the manganese oxide batteries as well. And the interesting thing is that, and I like what Brian said about high purity manganese products and not only saying high purity manganese sulfate, is because potentially the LFP guys will actually prefer to take the oxides as oxides or potentially even as metal powder. So there is a niche within the greater manganese space, which is obviously still mainly a stainless steel and kind of alloying material that would, but within our segment, manganese is, again, as long as we're not going to sodium or to chemistries that are, that are hydrogen and so on, but within the lithium ion space, manganese is a great hedge in a sense that it's pretty much safe either way. And a lot of work has been going on that. And yeah, it's at Traxys actually. We have a project in South Africa, which, as you know, is both high grade and oxide enough to allow it to be leached without roasting, which is the holy grail. How can you sort of go directly to hydrometallurgy with as less as possible, or at least amount of pyro in the process, which has to do with the carbon footprint and with the energy and intensity. So yes, the M in the NMC and the LMFP is definitely yeah, maybe not like the McDonald's M, but it's definitely something that we're very optimistic and we are placing our own bets into that letter and abbreviations.
So as a junior developer, Brian, I'm listening to this, and you mentioned that there's a big stainless steel, market that manganese kind of goes into. So I'm immediately thinking of like, okay, nickel is a big market, right? And graphite may not be stainless steel, but steel industry is relevant. So like when you think of the battery application for graphite and the battery application for nickel, neither of those prices have been like doing so well for a while, and the manganese market is kind of big. So if you look for the battery manganese market, like how is the outlook? Is the outlook going to be different than kind of nickel and graphite?
Yeah, the battery sector is about 2 to 3% of the manganese total market. And when you start dividing it up, high purity manganese sulfate monohydrate, depending on who you're talking to, they're forecasting as high as $4,000 a ton. I'm not sure that we'll see $4,000 a ton. $2,000 to $3,000 a ton. Current prices are closer to $600, $650 a ton. I think my personal view is I think a lot of that is because there are a number of in the work HPMSM projects, and the Chinese don't want them built. There's only 2 HPMSM plants outside of China right now. One is in Belgium and one is in Japan, and the one in Japan is not a 10,000 tons a year. It's not a big producer. So I don't think that they want those projects built, and therefore they're keeping the price down.
As they do in every industry that they can.
Right, and the same thing goes for high purity electrolytic manganese metal. One plant outside of China.
That's okay, so China dominates the high purity manganese market.
Pretty much, yeah.
Got it. Okay, and your objective, you're in Minnesota, and you're pre-resource, or you're drilling, and we're
at NI 43-101 resource stage right now. Our next phase is to move from resource and get everything that we need to do to get to a reserve and a mine plan. So get to feasibility study. We're developing a drill program right now to do that, begin with the end in mind, and to get there as soon as possible. Not interested in being a lifestyle CEO. I actually want to go do something and get the mine producing and go build an HPMSM plant.
Okay, Jesse, having interviewed a lot of companies, some of which are lifestyle companies, that turn out to be lifestyle companies versus non-lifestyle companies. Which of the metals that are you most optimistic about, and any investments that you currently hold that you'd like to talk about?
Well, I'm still like very bullish about lithium, and even now, I think it's in the bottom. The price is in bottom at the moment. So if you look at the lithium, the fundamental why the price collapsed in the last couple of 18, 20, 12 months. The reason behind that, because you see the Chinese, they provide a lot of carbonate and hydroxide through like petalite, and which is not uneconomic based on the current price. And also you see the Zimbabwe, a lot of illegal mining, they offer a lot of concentrate to the market as well, but they have some issue in terms of pricing transfer, and also the ramp up issue, and most of the project they always delay in terms of the production, the permitting, etc. So going forward, I think the surplus is only last for in the next 12 18 months, and after that I think it's a transit point, pivot point for the lithium price to pick up again. So I'm still bullish about that. And then if you look at the how to make this junior mining sector great again, especially in lithium sector, I think government play a very critical role in those sector. And I think Australian government, they have an EDI called Exploration Development Institute. Actually, they did a very fantastic job boosting the investment in mineral activity. So they offer the tax refundable offset, and also they reduce the burden for the early regulatory burden for early stage company, which help the all this Australian exploration company. They got more funding reduction from the government to improve their exploration activity. So which will help us to bring more high quality project online. Secondly, I think the ESG criteria is really important. So nowadays, as a fund manager, so we look at the company who has a strong, demonstrate the strong ESG practice that can likely to attract more investment into their company, not just mitigate the risks, but also you can see the ESG, and especially for investors who prioritize their sustainability, can bring more capital into that funds. So in terms of the investment holding, I cannot disclose the company that we like, but we always looking for good management team, not lifestyle CEO, but good management team, skin in the game, has a very good track record in terms of the project resources. We always looking at world class assets. Patriot, for example, in Gems Bay, and also mineable and buildable as well. In conjunction with that, we always looking for strategic partner. If the project can demonstrate they have offtake partner or downstream partner, I think this further demonstrate the project is more economic and is more viable in the future. That's type of criteria that we're looking at if we invest into a company.
Okay. Do you have a preference between hard rock, brine, clay, direct lithium extraction, or do you invest in all types of
We
lithium?
invest in all type of lithium. So hard rock has their advantage. Hard rock, if you look, it's much more easier to mine. I think the flotation, the flow sheet is much more simple compared to brine. And we like brine as well, but I think if we look at brine, we always think about advanced technology as a big portion of it. We talk about DLE, direct lithium extraction, portion of that because of the ESG footprint. You look at Chile, actually now they're banning company to do the evaporation plant in the country. Argentina is still doing okay with that, but in the future, I think DLE is a game changer for the industry. If we can achieve in a more commercial large scale through DLE technology, I think we can bring more supply online through a most cost effective and also environmental friendly way to the market, and I'm bullish about that. So yeah.
So do you think the American kind of DLE or Canadian DLE stories in the Smackover or the Salton Sea or in Calgary, are better bets than, the hard rock or the sediments that are in Nevada or Canada, or are you equally placing bets on both?
Well, it's not apple to apple. If you look at the capital expenditures for hot rod, it's much more cheaper compared to brine. But if you're looking at the operating cost, like hot rod is more expensive than brine. If we're talking about lithium hydroxide or lithium carbonate, for example, if you're using the brine to produce lithium hydroxide or carbonate, the cost maybe could be somewhere between 3,000 to 5,000. If using the hot rod to produce the downstream product, maybe it will cost you $7,000 to $9,000. So it's not apple to apple. And if you're talking about the DLE technology, there's different type of DLE. It's not like one is better than the other. I think the DLE, the way I look at it, is customized DLE. So every salar, every brine project, they have their own impurity, purity, and the ppm is different. Like they have a different component. So the DLE technology, some reason, for example, this is quite famous in China. They provide a lot of pilot plant in South America. So it's not like one DLE fit for all. It's customized. So the DLE technology in Calgary, maybe you need to tailor a little bit to make it work for your project. So DLE is not one fit for everything, but it's a very it's a good technology. It could be a game changer. I call it disruptive technology in my mind.
Okay, Era's technology is
Yeah,
what you
it's-
wanted to focus on. So do you agree on DLE?
Yeah, I agree with DLE, but I would even say DLE is an approach and not a technology. And there are various ways of direct lithium extraction. It's very different, like you're saying, to go to basically to a spent well with production water in it that has still a tad of oil and a bit of the minerals that the rock around the well was shedding. Then, for example, the Salton Sea, where you have very hot, very corrosive geothermal water, or just a more kind of benign salar, which is basically a spoiled aquifer that's not potable anymore because it has too much salt and heavy elements in it, etc. But yeah, so definitely cautiously optimistic on DLE as as something that could help us add more lithium units and bridge that 2 million ton gap by the end of the decade, and probably a bigger gap going forward. I guess that's something I think, Howard, you and I were playing with apropos using movies and records and all that. There was the movie Everything Everywhere and All at Once.
Mhm.
And I think that was when we were chatting about it last year or the year before, something that we sort of mentioned when people asked, so how are you going to bridge that gap and what's the best approach and what should come first? And the answer was, and I think still is, everything everywhere and all at once. And still, it's going to be tough to actually meet the, close the demand gap on time. And when I say on time, I mean in such a way that by 2050, we will be, as a society, as a planet, net zero, which at the end of the day is the real goal here. And this, I guess, kind of connects me to tech will save the day. That's what part of what we're doing. There's two narratives. One is that people care now not only about what you make but how you make it. So it's very important to deploy technologies and processes and ways of doing things that reduce the carbon footprint, the energy intensity, and the waste streams of pretty much everything you do. And so that's sort of one thing that we're seeing on the technology front. And I think that from that perspective, the various programs that we have here in the US really helped steer the pot and start creating this almost like a deep tech community, an ecosystem of a lot of smart people trying to find a lot of solutions. It may have to some extent also confused the investors a little bit because they're asking themselves, wait a minute, if we're going to end up in hydrogen, why am I investing in graphite and lithium? But besides that, which is a bit of a background noise, but still probably positive if you're diversified enough, there's two things we're seeing. One is that on just speeding things up, advances in exploration tech are going to make a huge difference. And we're seeing that already. Companies like Virai, like Cobalt, like Exploratech, that are helping to generate a more accurate target bank for the drilling and for the prospecting faster is very important. And this can, when a project takes 15 years from discovery to commissioning, and let's say the first half of that is sort of from the early discovery to the BFS, typically, if you can squeeze those 7 years into 2 or 3, you already made a huge difference. And if you can avoid some of the false positives, it will reduce the element of lifestyle quite substantially, because there's a whole community that's, making its living by the mystery as opposed to history, as some people like to joke about it. And we definitely see the technology, that AI, that mass data crunching, that machine learning, that better ways of crunching all that data and coming up with more reliable and more actionable and a higher hit rate is something that's going to help quite a lot and squeeze the timelines, and also push more discoveries into the sausage factory where they can start progressing. So that's one area where I think we're making a big difference. Another area that I'm seeing is that, we already know that a lot of these conservative companies that were perceived as very stagnant and so on are already, they have electric yellow equipment, huge autonomous trucks, drones are hovering all over, and and it's actually, it's becoming more and more not just a science savvy kind of sector, but also very, very much tech savvy, and there's openness to deploy new things. So one of the issues with hard rock mining is that it consumes a lot of energy, whether it's blasting, excavating. Then you have at least 2 stages of crushing, and then you have your milling, or the comminution as it's called. This is very, very energy intense. If you could reduce that, that would make a big difference. So there's a company that answered to this ask, and they're basically, in layman terms, zapping the rock and fracturing it and making it more friable. And through that, they reduce the energy intensity from rock to the right size, which you can then take to hydromet or pyromet. And they were chosen by BHP Billiton for a pilot project. And as we speak, they're actually having a good scale pilot in Escondida and in one of the mines in Australia. And if this actually works, it reduces the carbon intensity of hard rock mining dramatically. And that's just one thing that, that's very relevant there. We've seen a lot of advances already on, there's a company here, Lifezone Metals, that developed a system where basically hydromet replaces pyromet in PGMs and in base metals. We're seeing companies like Nano One, for example, that's going to make cathode from powders. Pure Battery Tech, that's found a faster way to go directly from black mass and from HPAL.
Are all of these are like a U.S. or the West?
Some of them are
U.S. or
not only.
Chinese.
Not only. Most of them, but what we are seeing is that, look, in China, Japan, etc., they already have they have been working on this for 20 years. But I think
trying to
the
get
next
at is there scope for like the
yes,
U.S. to leapfrog,
absolutely, absolutely,
and catch up,
absolutely.
Right? Like if we've lost round one here, not only from the mining perspective, but also kind of like downstream and autos.
I think this is
like,
our opportunity. Yes,
okay.
I think what happened was that if you actually take a step backwards, you look at cars. We had the Western OEMs, we had the Americans, then we had the Europeans, then came in the Japanese, then the Korean invasion sort of happened, and we found ourselves with a certain pie chart. And then, as China was industrializing, everyone thought that, in China at least, that as a matter of fact, the next round of brands will be Chinese automotives. And that's where I think, don't quote me on that, but I think that the incumbents were rather protective on their turf, and they did not want another wave of new brands sort of entering into that. And in ICE, on the internal combustion engine kind of pie, it seemed like it was already too crowded. And as the Chinese brands mainly, but also some Indian brands were trying to penetrate, it was bureaucratically challenging, let's put it this way, to get the fit for road and all the qualifications and homologation that you need. And then it sort of it aligned with the transition to electromobility, and this enabled basically the whole emerging Chinese automotive industry to leapfrog above ICE. And instead of competing with the incumbents on their terms and their turf, then, like in I forget, it's Porter, I think, with the forces that the forces that a company faces, the competitive forces that a company has to face as an incumbent. And one of them is the most risky one is basically the disruptive new entrant, which basically caters for the same need and answers for the same ask. In this case, mobility. I want to get from point A to B, but in a different way, which is more efficient, cleaner in this case, greener and cheaper. So the Chinese did, in a way, leapfrog above ICE. And potentially, I think that since the trade-off with what they did was how they do it in a pollutive way in the nickel industry in Indonesia, in, chemical plants with certain question marks on the lithium side in China and so on. This is perhaps an opportunity to leapfrog again on the safety, on the environmental standards, on the carbon footprint and so on, and maybe not reinvent the whole sector and replace lithium-ion batteries completely, but within that pie, be the disruptive and solution that answers for the same ask in a much, much better way.
Okay, great. Frank, I'm going to actually weave something from there because you're referencing technology and Robert Friedland, my first client who got me in this racket 22 years ago. He's had this iPulse technology, which he's been touting in recent speeches, is going to go public finally after 20 years. But he also talks about, AI as being a huge reason for being bullish copper. You said copper was number one for you, and number two is lithium. I'm thinking, if AI is massively consumptive of electricity, right? Shouldn't that also be good for energy storage solutions, which by definition should also be good for lithium? So like AI, we're bullish energy storage. Energy storage has always been second. It's growing faster, but still from much low base, versus the EV. But like if AI is the dominant thematic, are you bullish lithium, for AI reasons? But also, could you just talk about your price forecasts for copper, for lithium, and the other metals you cover?
Absolutely. So, absolutely right. In terms of data centers and how much more energy they'll consume, absolutely helps copper and absolutely helps lithium with regards to energy storage. Part of the reason I like lithium is because it's very indifferent when it comes to chemistries. The only one the challenge is really the sodium ion, but that's really, really early on. So lithium is in whatever chemistry iteration today, whether it's nickel rich or LFP, LFMP, and so on. So with regards to, let's say, copper in itself, I would say we are quite bullish on copper. We anticipate prices to kind of go into the 12 to 13 over the next 5 years. That's the expectation, higher than what they are today. However, the problem with copper is copper. The supply is not able to react. So I'm kind of really looking at ways for substitution for copper, if any way possible, with aluminum, especially a lot of the state grids, as a way to dampen expected demand growth. Because otherwise, copper is going to go through the roof, and
but aluminum can substitute for copper in a lot of the AI electrification.
I would still have the wiring cable applications, absolutely.
Okay, yeah. And aluminum is in oversupply, or
I would say it's in a better position than copper for sure.
Okay, because copper, Robert says more lithium, more copper is going to be needed. What by 2050 than was
all
used
the things
in the past 700 years?
Exactly,
but I know, because having, worked with his companies, like lithium is abundant, and, for not a lot of exploration dollars, you can define a relatively large resource. Yes, you need to spend some money to kind of build it, but I just articulated, what is a mega project, in America for, Thacker Pass at 3 billion. Copper projects are, 6, 8, 10 billion. Right?
Absolutely
they're massive. So and there hasn't been a lot of exploration done in copper. So I'm wondering, it's so impossible that it will thwart, unless there's substitutes. And in some ways, the same is happening, for electric vehicles. We had all these kind of great forecasts, supply won't keep up, but if demand ratchets down a little bit, right, then it can kind of catch up. So it's now AI all the time, but you're starting to see, I saw an article in the Wall Street Journal yesterday just saying it's not happening as fast as, we were just forecasting 6 months ago. So could it be slowed down? It's just
well, look, I mean,
question.
Expectations always change because of market realities, right? I mean, every 6 months, the forecast is going to be a little bit different. And I agree with regards to, if supply can't keep up, the market will adjust basis the needs of the consumer. When it comes, if I pivot back to copper, I'll add another point to your point is we don't really have those tier one deposits as much before. And we just did a little bit of just to compare, maybe a decade ago, there was, maybe 30-40% of the copper projects were in the hands of the Western companies, whereas today, maybe half of them are. And the reason is not because, we found more, but because we weren't building. The Chinese built in DRC, the Chinese built in Zambia, and so on. So to me, it seems like the majors are more interested in optimizing their own books with each other, like the BHP play on Anglo and so on, versus maybe putting money into the ground.
Well, yeah, that's what Friedland was saying as well. Like a BHP Anglo, it doesn't create any new copper.
Exactly, it doesn't create any new copper.
But he's created new copper. He's made big discoveries, right, in Mongolia and now in the DRC. I don't follow the copper market closely, but some people say if you ramped up everything that he has, it actually could have an impact on the copper price. I don't know in what time frame, but the copper market is big and there is recycling, and you're saying there's substitutability. So it's just we're trying to figure out what's I own the copper ETF just for a long time, just a bet that it would come. But Robert's been saying I'm going to need a telescope to see the copper price for 15 years, right? So it's now happening, but in real terms, it's, it may have hit an all-time high in nominal terms, but in real terms, it's still he was forecasting 10,000, literally 10 years ago. Right. So I just wonder, I'm skeptical, CNBC had, a piece on copper, in the last month. And 2 years ago, they had a piece on lithium. So if it's on CNBC, it's a toppy sign.
That's a time to
sell. When it comes to substitution, a typical pricing is 3 to 4 aluminum to copper, right? That's already the price today in copper is high enough to incent a lot of, let's say, retooling. And it's slow. There's a lot of, let's say, specifications and challenges. It's not like a switch of a button that you can substitute. But certainly, if copper goes in this trajectory, it's going to be a shortage, not a deficit, and the market will find a way. And aluminum is the answer for that.
Okay, I don't know a ton about manganese, Brian. So but I do want to give just some more discussion onto the manganese. Erez knows. Do you know much, Jesse? Do you invest in manganese at all?
Not really.
Not really. Okay.
Not yet.
Yeah, not yet. Yeah.
Well, no. Speaking of technology, we're also planning on using AI and machine learning for our drill program. So the idea is that, again, begin with the end in mind. We want to get to a feasibility study. We want to get everybody in the room and figure out what we need to do in this drill program to get there, and then use artificial intelligence to help us optimize that drill program so that we can accelerate the movement towards that. From a manganese perspective, the clean energy transition is happening, like it or not, whether you believe in climate change, you don't believe in climate change. I'm an old coal miner, so I don't like the fact that we're getting rid of all the hydrocarbons, but it's happening. And with the electrification of everything, vehicles will be electrified. We need battery storage. 60% of the lithium ion batteries use manganese. So manganese isn't going to get disrupted out of battery chemistries anytime soon.
Okay. Sorry.
Just one little comment on, if I may, on supply demand, and there's been this concern about the rate of adoption of EVs, and almost to a point where people would think that that it's actually that the percentage of EVs out of the total pie is declining. It's not. It's just that the acceleration rate has sort of slowed down to a point, and to my mind, in the US at least, and probably also in Europe, it's not really a demand issue, it's a supply issue, because we failed to build the Model T, the affordable EV that actually allows you to cross that chasm from the early adopters to the general population. I don't know a lot of people who are saying, I'll never drive a damn EV in my life anymore. I think that type of resistance is pretty much gone. A lot of the range anxiety, it's more a practical thing, like, how far do I live from the petrol station? It's now by, where can I charge it? But if we had $25,000 EVs, if we had the equivalent of the 1.6 liter Corolla from 30 years ago in EVs, I'm sure that this gap would be leapfrogged or crossed, this chasm, any way you want to call it, would be crossed, and we wouldn't be so concerned about the deceleration of the acceleration rate or whatever it is.
The conundrum is that we do have a $20,000 EV. BYD.
It's made in China.
Made in China, exactly.
Actually,
and that's a very good point.
I just realized you're bringing up this point in my presentation. I just gave it. I skipped over a slide, which is actually the most optimistic slide. The optimistic slide, which is, Tesla's having their Robotaxi unveil on August 8th. And right now, the narrative on Tesla has been negative, because of slower sales, but also layoffs. And now they're focused on his compensation plan. But once that vote goes through in June, I think all eyes are going to turn to this Robotaxi unveil. And in the Q1, there was a speculation. Reuters said he's giving up on the second generation vehicle, the cheap car. And he said, no, they're lying, but he's not going to. He didn't want to give details on the call, but wait till August 8th. And now I've already started seeing YouTube video kind of speculation about potentially 3 new models that might be unveiled there, which will be cheaper models using both the new technology, but also he has 3 million car capacity across all of his plants at present, but he's only producing 1.8 million cars, right? So increasing capacity utilization to that, I think, will be a potentially a significant kind of demand driver and focus. But it's not, Jesse, you want to say something?
Yeah, so we're talking about the adoption of the EV. Another key issue in the US is the infrastructure for the charging station. If you're a consumer, you want to buy the EV, I think the top concern they have in their head is, how can I charge my my car? How far I can do my second charge? I think infrastructure, EV charging station is a key, I think, concern for the consumer to buy an EV car.
I agree. How do you think that we're doing in the United States with, outside of Tesla allowing all of the other companies to use their superchargers, which are a great competitive advantage of theirs, but some of the other ones or the government funded ones like Electrify America or ChargePoint, like those companies aren't doing, so well. How do you think we're doing, on improving charging?
Well, yeah, I mean, a colleague of mine did the experiment of driving from San Francisco all the way down to San Diego. They managed to do it. It was a bit of a hassle to charge along the way, but they did it. So, I mean, the infrastructure is there for those that really want to experience the EV in that way. But I agree, it's lacking in terms of the density and also the battery, let's say, size, the needs of our North American market. It's very different from Europe and from China, which are very much densely populated areas. So it's very different. One solution, again, it's a Chinese solution, is the latest CATL battery, which is 1,000 kilometer. I mean, they claim 1,000 kilometer, 10-minute charge for 600. I mean, it's magical almost, right?
Right.
But they've broken LFP technology before in terms of their blade, how they pack it. So, I wouldn't dismiss it. The challenge I see really, maybe I'd love to hear the other panelists kind of talk a little bit about it, is our legacy OEMs, if they're not able to deliver a low cost EV solution for the global South, they will, in essence, become domestic manufacturers.
Right.
So a real change in terms of the big names that we see today. What do you think about that? Let's say provocation. Like, is that like,
they've already lost. I mean, GM in the last bankruptcy scaled back a lot of their ambitions. I think if they can make big fat Hummers and profit from that, they'll be happily cede the global South. It's my observation of Mary Barra, right? And that's what is happening. I mean, in countries that I mentioned it in my presentation, if the country does not have a big auto manufacturing industry to protect, they're more than happy to take BYD Seagulls at 15 grand.
Yeah, exactly. Yeah.
And also, I think this year, if I'm not mistaken, or they just announced a market, they will launch another new model of their combustion engine vehicle because they want to achieve their revenue and also P&L this year. So they kind of put the EV development on the side because they can't compete with the Chinese manufacturers. So that's something we see. And also back then, we see a lot of car manufacturers, they're very interested to invest in upstream lithium mine. Sigma was on discussion with a number of car manufacturer OEM back then, but now you see the slowdown here. So yeah, I think because of the economic downturn and also Chinese low cost producer, no one can compete at the moment. And also now you are talking about if you use any EV component made in China or owned by Chinese company, more than 25% ownership of the company, you cannot get the 7,500 tax credit. I think that's another reason to slow down the EV energy transaction outside China as well.
Absolutely.
No, definitely. If American and Western OEMs are in the mobility business, transportation business, and not in the ICE business, kind of going back to the cars and trains cliche, then they should definitely use the this sort of this time or this sort of fence or defense that the Section 301 tariff is going to provide them here in the U.S. with a 100% tariff on Chinese EVs, and use that period to actually prepare themselves for the moment where competition will open up again with everything that has to do with that. Otherwise, they just don't really have a right to exist. And if we are talking about other ways to sort of mitigate the supply-demand gap, then part of it probably has to do with having more modest and smaller models. Just a car doesn't necessarily have to be 2 tons of critical materials. If you think about it, it's kind of the average size and weight of a vehicle has grown quite substantially in this decade, and maybe it's time to sort of think about that a little bit. And the other thing is something that we haven't spoken of probably since COVID, but when we started talking about we were having our panels in 2016, 17, it was, it wasn't just, it was shared, electric, autonomous. These were the 3 sort of components of the mobility revolution. Autonomous, has its issues, obviously, and it does look like in the haulage and transportation and industrial sort of activities, it's already taking place. Might be a little bit more challenging, kind of densely populated, kind of multiple decision layers with a lot of humans around. But when you still have the human error, and until everything is autonomous. Shared to some extent, kind of got lost on us.
That's Robotaxi, but we're having the Robotaxi unveil August 8th, and Elon Musk says a bet on Tesla is a bet on them solving autonomy. And NVIDIA is saying, Tesla is the furthest advanced.
As an Earthling, if we have a swarm of these autonomous small hop-on, hop-off solutions, everything on the app, it solves for at least the urban part of the population where it's dense. It may be not solved for a ranch or 1,000 kilometers from the nearest town, but it on a Pareto basis, it's going to solve 80% of the issues, and that's not bad.
You can go to Phoenix and drive in an autonomous taxi.
Right. Is that the Waymo or
yeah?
Okay. All right. We have just a few minutes left here. Just to curiosity, not who you want, but who do you think is going to win? Trump or Biden? Each of you.
Trump.
Trump. Okay.
Trump.
No comment.
Just a guess. It's not an opinion. No comment.
No comment. As a
Okay.
New Yorker.
I had to be a contrarian. So.
I think the odds are better than 50% that Trump wins. Okay, so what does that mean for battery materials?
The Oval Office becomes an Oval Cell, I think.
Okay, bullish, bearish, neutral.
Neutral. I don't think there'll be much change.
I agree. I think it's all blown out of proportion. I think, Trump continues to be very much against China, so will continue to be protectionist with regards to the U.S. He's very much pro bringing industry and business back to the U.S. So I would say if neutral to positive a little bit in terms of the commodities.
Neutral to positive.
I would say, yeah.
On positive on what aspect? I think he's positive on like permitting and like getting domestic.
Those are getting
materials,
domestic.
But do you think he's positive demand?
I'm not sure about that piece. I think neutral on demand, but positive in terms of economic activity.
Again, neutral to positive. I think it's going to be more favorable for the extractive industries in general, and I think that mining is an extractive industry.
Right.
And take into account that a lot of the downstream is in red states. All in all, might be a different vibe, but no, I wouldn't.
Okay, so
I wouldn't worry about that.
If you only cared about demand and the direction of battery materials prices, do you think Biden, if he wins, will be negative, positive, or neutral?
Maybe I'll go. Well, look, we all recognize the future is net zero decarbonization. How fast we get there is maybe the debate between the two positions of the U.S. politics, right? So I would say, in the self-interest of the U.S., you want to make sure the U.S. is competitive within this sphere. So I think, maybe a little bit stretched out to give the industry time to adjust and socialize themselves with regards to how to compete with China to find a way. But I think that's kind of. Yeah,
I'm not sure that I'm not sure that Trump thinks in kind of like net zero sustainability ESG language.
Well, he may not have a choice. It's what the people have been conditioned to want to expect this.
He left like the global climate agreement, right? Yes, do you want to ask a question?
Yeah. Sodium-ion batteries, and from what I understand, the technology has already been proven. Now, commercialization and creating the industrial complex to provide these batteries for OEMs, be it car companies, mining companies for that matter, is not in place. And certainly some components, especially the anode component of sodium-ion batteries, supply is quite questionable. So these are the constraints. So considering that these batteries charge much faster and much more recyclable, etc., all the advantages they have, how concerned are you, and what market share do you think lithium-ion will lose to sodium-ion batteries?
I'll tackle it first. So our house view is that sodium-ion will have a good place in energy storage, given that to get the equivalent, let's say, energy density out of LFP, you need like 3 times the size of the volume. It's not quite working. Now, coming from the nickel industry, we said the same thing about the LFP, and we were kind of, fooled, or not fooled, but we obviously were proven wrong because, we were maybe falsely hoping that nickel chemistries are going to become the dominant, which isn't the case, probably not. So our house view is that we're going to see growth certainly over the next 10 years. But beyond that, it's really tough to tell because we'll probably have a lot of tech surprises in terms of how to make these things work. But yeah, what's your theory?
I wouldn't sell my lithium ion yet. I think that sodium will have its place eventually, probably mostly on stationary. You'll still need nickel because there's a little nickel rod that's stuck into the salt, and of course copper and everything around it. You'll still have, if it will become something that goes into to anything that requires propulsion, you'll still have the magnets and all that. So it may play a role, and perhaps an increasing role, mainly in stationary applications. But I think in the more dynamic parts of the use cases, it's going to be one of the things that will coexist. I think that one of the things that we will see. we'll have hydrogen, we'll have the lithium kind of family of solutions. Hopefully we will have sodium ion as well. And we haven't even mentioned nuclear yet, which is not going anywhere and probably coming back.
So actually, BYD is building the commercial scale for sodium-ion battery. So according to Benchmark podcast, they're talking about sodium-ion battery could potentially replace LFP only because they are much more cheaper and also the life cycle is much more longer. But you mentioned the ESG footprint. Sodium-ion battery actually is not environmental friendly. So just keep it in mind from ESG standpoint. That's one of the disadvantage about sodium-ion battery. Evaporation and yeah, so the carbon footprint it take much more. I haven't done the math yet, but based on the report, the sodium-ion battery is not environmental friendly from ESG standpoint.
You'll need to plant a lot of trees to offset that. There are definitely advantages, but that's why we're talking. It's always trade-offs and potentially some sort of a coexistence.
With low-priced LFP, right, the argument for sodium is less, right? So if lithium prices get very high, so the cost element, the replaceability, the substitutability, from what I've gathered, Romotion and Benchmark and others are very good at analyzing this market. I have a YouTube channel called Rockstock Channel. We interviewed Iola Hughes of Romotion, and you could look at that. But I think she forecast like sodium ion to have like maybe 10% of the market or slightly less by 2030. Thank you very much.
Thank you.
All of you.